If you or your broker have been trying to save you money on premiums without cutting coverages, then you're in the right place. And what better way to start this video off than a joke from Tommy Shelby from the Peaky Blinders, New Year's edition. If saving money on insurance feels harder than keeping New Year's resolutions past January, then you're in the right place. And I'm not even going to attempt to do that with his Birmingham accent. Okay, getting right into it. What are you going to learn in this video? Well, 1, you're going to learn 5 practical ways to cut costs without reducing coverage. 2, you're going to learn common mistakes that cost businesses thousands of dollars. And 3, a strategy that saved one of my clients 20% on their insurance without cutting any coverages. Okay, key point number 1 is building out risk management programs. And the reason why risk management programs are important is because insurance premiums are all about risk. The more you can manage the risk, the lower the premiums are going to be. A really good and well-executed risk management program reduces your actual claim amounts, and it's going to reduce your premiums as well. So you could be saving money on 2 different fronts with this program. And you can see that in this mini bar graph here as well. When the claim amounts rise, so do the premiums, and the same thing when the claims fall, the premiums fall as well. And let me break down what a risk management program is in a little bit more detail so that you have a better understanding. A risk management program is a broad program that implements a few different things to help you manage risks. It might include everything from annual risk assessments to implementing hazard controls, training employees, and purchasing the right types of insurance for your business and for your region. So basically, a risk management program is a proactive approach across many different verticals to help you lower your premiums. So here's some more specific examples for risk management programs for various different industries. In a logistics company, you might have fleet training, telematics to monitor driver behavior, and vehicle maintenance schedules. So think about this. If you have fleet safety training and your drivers are getting trained on safety, and they have telematics to make them feel uncomfortable doing anything ridiculous on the road, and there are regular maintenance schedules, and then you could prove that to the insurance carrier, your premiums are going to go down. But not only are your premiums going to go down immediately once you show them that you have these 3 things, but your claims are going to go down as well, which means that your premiums are not going to go up over time, and you're going to have less out-of-pocket expenses for those claims. So in construction, we can have job site safety protocols, we can have regular equipment inspections, and we can have PPE compliance checks. Again, something that you can prove to the carrier. In retail, we can have slip and fall prevention measures and proper equipment stacking techniques. And these are just some examples for some industries. Key point number 2 is bundling your policies. I know this seems like a no-brainer, but a lot of people will break out the kind of policies that they have between multiple different carriers and even multiple different brokers, and you definitely don't want to do that. At the very least, you want one broker managing all of your policies, and where you can, try to get one carrier to manage all of your policies as well. Obviously, this is easier said than done, and you're more likely going to have 2 or more carriers, but you're going to get bundle discounts if you're able to do so, and you're going to save yourself from a big headache from having to manage all these different policies in all these different places and having all these different renewal dates. And here's what's really cool. You can at least get your property insurance and your general liability insurance bundled into one policy called a business owner's policy. And this usually gives you a significant savings of about 10 to 15% versus having to have these policies be separated. And a lot of the time when you're going with a big carrier, you'd be able to get your workers' compensation done with them as well. This isn't always the case for all industries, and it's not always the case for all states, but you get the idea. And if you like what you're hearing so far and you're looking for a proactive broker who actually cares about your insurance policy and checks in with you annually, well then why don't you try to book a call with us at quotes.commercialinsurance.io/total risk protocol. Just to introduce myself, my name is Alex and I've written hundreds of insurance policies over time, and I really take being a proactive broker very seriously. So again, if you want to talk to somebody that really knows what they're doing, quotes.commercialinsurance.io/total risk protocol. Okay. Going into key point number 3 is improving safety protocols. I know this really sounds a lot like key point number 1, but safety protocols or safety programs are very different from a risk management program. A safety program could be part of a risk management program, but it does something very specific. Because while risk management can include financial, operational, and reputational risks, safety protocols are all about creating a safer work environment. So this could involve enforcing proper equipment usage, running regular safety drills, maintaining safety signage, or even implementing OSHA guidelines. Workplace safety protocols are meant to reduce workplace accidents, and they're meant to reduce claims, which in turn also reduces premiums. And most importantly, it helps protect your team's safety and health. For example, I had a manufacturing company that was able to implement a monthly safety training program that I created for them, and their premiums nearly dropped by 20% over a 2-year time span. And of course, their claims did as well, which means that they had less out-of-pocket claims costs. So remember, safety isn't just an expense, it's an investment that actually pays you back over a long period of time in terms of safety and in terms of money. So here's some practical safety tips. One is a written safety plan. Even better is a video safety program with a written component. Of course, we do that at CommercialInsurance-io. 2 is sharing that safety plan with your carrier for a discount, because this confirms with the carrier that you or your broker are not just checking the box that says that you have a program, because a lot of the time what brokers will do is they'll check the right box and say, yeah, we have a program, but they don't actually include the link to that program, so there's no proof that it actually exists. Number 3 is having regular training sessions. Reinforce those safety standards through ongoing education. You're actually going to start seeing your claims go down and your premiums go down as well over time. And number 4, reward employees for maintaining safety standards. Incentivize the good behavior to encourage consistent adherence. And again, these steps don't just prevent accidents, they build a culture of safety that pays off with fewer claims, healthier employees, and lower premiums. Super important. Key point number 4 is auditing your policies annually. Now, this is really important for your broker to do, but it wouldn't hurt for you to do it as well. And if your broker doesn't do it, well, then you may need to change your broker, to be honest with you. 1 is you got to check for sold assets. Remove vehicles, equipment, or property you no longer own. What's the point of paying for premiums for items that you don't need to insure anymore? 2 is updating employee roles. Ensure that your employee classifications meet their current roles, especially for workers' compensation. This is going to drastically change how much you're paying on premium, and it's also going to keep you compliant. Number 3 is review your coverage limits. Ensure your limits reflect current business operations. If you're buying new locations, if you're expanding the square footage of the location that you're in currently, you want to make sure that these pieces of information are updated with your policies so you don't end up going out of pocket for any kind of claims in the future. 4 is account for business growth. Add coverage, again, for new locations, vehicles, services, equipment, or anything else. 5 is eliminate redundancies. Identify overlapping policies to streamline your coverages. I've seen many times people have business owners policies which cover general liability and property coverage, and then they have a completely separate property coverage policy, which means that they're overcovered and they're paying way too much in premium for no reason. And here are 4 ways that annual audits save you money. 1 is you remove outdated coverage, so you avoid insuring sold or unused assets, like I said, vehicles or equipment. 2 is you prevent overpaying for limits, so you get the right size coverage limits to reflect current needs. And then 3 is you identify new savings, so you could leverage discounts for bundling or proactive measures like safety programs. You could adjust your safety programs based on certain things that you've learned within your business over time. 4 is you can catch compliance issues, so that's avoiding penalties or premium hikes by just staying aligned with the regulations. Different states and different industries have different regulations, and those regulations change over time, so you want to stay compliant. And last but not least, we have key point number 5. And like I mentioned before, and I'm sure you're already aware, the more claims your business files, the higher your premiums are going to be. But if your broker takes proactive measures to avoid all of these claims in the first place, then you're going to reduce your premiums over time, just like I mentioned throughout the rest of this video. And just like you can see on this diagram right here, if you have no risk management program, you're gonna have more claims. No safety program, same thing. No culture of compliance or safety, same thing. You start having less claims and lower premiums when you implement a risk management program, when you implement a safety program, when you have a company culture of compliance of safety, and of course, when you have a very proactive broker that helps you out with all of these things. And here's a nice little bonus that I have for you guys, which is practical claim prevention tips. 1 is you want to keep a detailed maintenance log. So you want to document equipment and vehicle upkeep to ensure that everything is safe and operational. And this helps because if you have a piece of equipment that's faulty or defective and you show that you're keeping up with the maintenance, then you have very easy proof to show that that piece of equipment is in fact defective. 2 is address risk immediately. So fix hazards like broken equipment or unsafe work environments before they lead to any accidents. I mean, you probably, I hope you do this anyway so that your employees don't get hurt. 3 is have a clear claims management process. So develop a structured plan to report, investigate, and resolve claims efficiently. You got to work with your broker to make sure that this is implemented. Here's again an overview of ways to lower costs without cutting coverages. 1 is you want to implement risk management programs. 2 is you want to bundle policies for discounts. 3 is improve safety protocols. 4 is auditing policies annually to remove unnecessary coverages, among other things. And 5 is proactively reduce the claims by following all these other steps. And again, if you're ready to find your savings without cutting coverages, then give us a holler at quotes.commercialinsurance.io/total risk protocol. This is Alex Bongiev, and I'll see you on the next video.